Welcome, traders from around the world. Welcome to this video, and thank you very much for watching. And take a look here on the left here. We have two people arm wrestling, and I can guarantee one thing for sure, that one of these will win over the other, and therefore being stronger than the other. So one is strong, one is weak. Now, that's what this video is all about. It's finding strong versus weak currencies. Since the beginning of time, the strong and powerful have taken advantage over the weak, but dynamic shifts can and often change. The roles often reverse, and the strong become weaker and the weak become strong. And so it's the same with individual currencies. Today, the USD may be strong, and tomorrow it becomes weaker, and guess what? A new currency like the British pound takes over to dominate the currency markets. This is how you should trade, guys. This is how you should trade the currency pairs. Knowing which individual currency is strong and which is weak will help you make better decisions in choosing the best pairs to trade. Okay, this is me again. This is Martin here. That's my name, and I reside here in the Toronto area of Canada. So I have quite a number of traders from around the world who are following my program, and some of you for the first time, if you want to get my free Forex signals, you've got to send me your email address. Okay, so the reason is because I send out the free signals to your email inbox, and that's the only way I do it. Okay, so again, this is me, Martin. I'm a proud Canadian trader, and you would send your email with your first name, okay, and where you're from to this email address, msky007@gmail.com. Okay, let's get going. And the very first thing, and before I look at last week's results of our trading signals and what happened, I have to share this with you. This is really important. It's my humble disclaimer. And my free signals service is an educational program only. I'm trying to teach you how to trade and not give you any specific investment advice. Now, don't blame me if you lose all your money. You probably weren't paying attention to some of the details in what I'm teaching you, and you're not following my instructions. Remember, for now, you're trading on a live account, but I put this here demo because this is for the people that are viewing this for the first time or new subscribers. New subscribers should always trade on demo for at least a couple of months. But for the rest of you, we're trading on a live account, and we're only trading with a maximum 1% risk of your account balance. For the most part, for the next few more weeks, guys, trade only with one micro lot when you open up a trade, okay? Now, last week wasn't a terrific week, so we're going to review all the signals, and we're talking about last week from April the 5th to the 9th, okay? And we had two new trades. We're going to look at that in a moment. Now, held over from the week before on March the 31st, I issued a signal, and that for buy CAD Swiss franc. It was held open till this week, and on April 6th, we closed it in a loss. In fact, it was stopped out because we use stop losses to minimize the risk. Okay, so that's the good news. Stopped out for approximately 66 pips. Okay, now on April the 1st, right here, I issued a buy British pound Japanese yen trade. It was an add-on to a previous trade, which was a huge winner. So you would have to look at last week's video to see what happened there. But this is an add-on or addition to the previous trade. And this addition, this new trade was a pretty good winner. First, it did hit the first take profit target for approximately 65 pips. So congrats to all of you who took that trade signal. Now let's get on to this previous week, okay, this current week. So on April the 5th, I sent out a signal to your inbox, guys, to your email, the ones that you provide me, okay? April 5th, it was a buy, British pound USD. It was a loss, and the price closed below our DTL line. This is a You would have to go to previous videos, guys, and research this, what that means. It means a dominant trend line. It's a moving average that's on the chart. But for the new subscribers, you would have to, I suggest you go back and look at previous videos to gain as much knowledge and information as you can. But for the people that have been with me for a while, you guys know what that is. It did close below the detail line. As soon as that happens, that's part of one of our rules, money management rules. We lost 76 pips, but again, it was minimized to only 76 pips. It could have been a lot worse, okay? And that's what risk management is all about. We want to minimize risk, not let risk become bigger and bigger and bigger, because we don't know when to close a trade. We always know when to close a trade with the free signals program, okay? On April the 7th, I issued a buy Euro New Zealand. It's still open. It's almost where our entry was originally on April the 7th. So it looks like it's going in our direction, and I believe we're going to get into profit in the next couple of days. So this is being carried over to this week, guys. So overall, not too bad. Not too bad. We lost a total of 77 pips, okay? Factoring in the win over here for this past week. But remember, for you skeptical newbies and people just subscribing in for the very first time or taking a look at the video for the very first time, I do have an approximate 80% win rate. Okay, so that is pretty darn good for trading on the daily charts. Okay, let's just remove that and let's go right to the signals. Okay, so the very first, this is the carryover from last March the 31st, the buy CAD Swiss franc, and I just want you to see my signals. This is a copy of what I send out to you in your email inbox, okay? Here's the entry, guys, at 0.7509 or better. In case price goes lower first, then enter at a lower price, which means a better price, okay? And you get in lower, and we're still looking for a buy, so you're going to make more pips if you kind of wait. But sometimes I suggest you take at least a small position as soon as you receive my signal. Now I do also provide you the stop loss, first take profit target, second take profit target. You have to apply that to your trade right away, guys. It's important to do that because you don't want to be watching the computer all day, okay? So let's take a look at the charts. And this is the buy CAD Swiss, and let's take a look. So here was the signal, guys. Oh, from last week, I should say, is the buy. So see right there, okay? Right there. And we got in right there at the 0.7509. So that's what happened the previous week. We got in there. And the next couple of 2-3 days, there are very small little candles. They're all like resting candles. But in this case, price did not go higher. It actually went lower. And you see, so we had our stop loss here. Let me just show you 0.7443. So our stop loss is right here, guys. So when this candle went down to here, we were stopped out automatically. And it's so important to put your stop loss in right away when you take the trade. I know some of you are lazy or waiting to do that after you enter the trade or whatever, or you're even waiting till later in the evening or whatever. But you know what? Sometimes you forget and you can't watch your computer all the time. So the tip is really, as soon as you enter a trade, then put in your automatic stop loss in case price reverses against you, and always put in your first profit target. And you can see that right here in the green. Okay, so this was a loss, and that's okay, guys. There's always another trade. Keep your chin up, and we always move on forward. Okay, always hoping for the best. Now, okay, let's take a look. Here's the next trade, April 1st, buy the British pound, Japanese yen. This was the addition to a previous trade, which made us quite a bit of money, and that was really good. So this is the new signal entry here. You can see at the 152.60. Here's the stop loss. Here's the first take profit target, second take profit. And I did mention to you for this edition, open a new half or very small position on this trade, okay? And I did say I believe price will go higher. So let's take a look at the actual chart, and I'm going to give you the original entry for the prior to the addition trade here. So this was the week before where price moved up quite a bit. We made quite a bit of money, and you can see here, guys, right here with this candle. Okay, so here is the signal. Okay, there is the signal, and here was our original trade entry buy British pound at 1.5160. That was on March the 30th. And so we got in right here at the close of this candle or the open of the next one. And you can see price went all the way up, and we actually hit our second take profit level. So this was a trade win with over 100 pips or so. Okay. Then I said add on. And by the way, this is the original stop loss right here at this level. Okay. You can see that. Then I gave you the add-on trade because I thought price was going to continue going higher, guys. And take a look. We have a new entry, 152.60. Okay. And let me get my drawing tool. So right there, we got in on this white candle. Right there, 152.60 actually was the beginning, at the end of this candle, beginning of that one, right? And it did hit our first profit target of 153.26. So that was good news, guys. Congrats to all of you who took this additional trade on this winning pair. And you can see the trend was intact. It was continuing to go up, but now it's come back down. Okay, so again, congrats. This was a pretty good win. And now we're going to get on to the next trade. Okay, and I'm going to take a look. It was on April the 5th. Now, this is the first new trade of this previous week. Buy British Pound USD, guys. Here's the entry. Okay, you can see that 1.3899 or better. Again, meaning, and again, remember, this is a buy trade, right? So, better means in case price goes lower first, then you get in at a better price, and then we'll watch price take off, hopefully, and make more pips because we got in at the better price. Okay, so that's what that means. Now, I did give you the stop loss here, the first take profit, second take profit. Guys, you can read the instructions here on how we take trades. It's important that you do this as well. Okay, and let's take a look at the actual chart. Okay, so here's the signal, guys. And this was a buy. Okay, so there's the signal right there. We got in right there, and yes, this candle was within our ATR rule. Okay, so I know some of you questioned that, but it was within our ATR rule. And anyways, the next day it just went down right here. You can see with this candle, and then down again further. So with this candle, here's the good news, and this is again the important tip and lesson about having proper rules for risk management. So the next day price went down, okay, and here we do have our, here we had our stop loss, 1.3794, but we weren't waiting till price went down further to stop us out. In fact, we purposely stopped ourselves out because once this candle goes below this line here, you see this thick line, that's called the DTL line. So once a candle reverses beyond the DTL line, then we automatically close a trade because again, it could go down further, and in this case it did. We never know where price is going to go. We're not going to guess. We have our rules in place to minimize risk, and that's what we did. So instead of taking a loss by our stop loss, which would have been greater, we stopped ourselves out because of prudent risk management. Okay, so that is the explanation there, guys. And let's go on to the next trade. Now, this is the next new trade of this previous week. Buy Euro New Zealand, guys, and this is an interesting one because we're still in the trade. Here's our entry. You can see it 1.69114 or better. Here's our stop loss, first take profit, second take profit target. Okay, and let's take a look at the charts. And here we go. So we got, well, first of all, here's the signal. Okay, so it's a buy signal right there, guys. We got in right there. Let me just get my drawing tool. I like this drawing tool because it creates a nice clean arrow. So we got in at the close of this candle or the open of the next one. It's the same thing. Our candles closed, by the way, at 5 p.m. Eastern Standard Time Zone. We're in the New York session time zone. So New York session, the trading sessions close at 5 p.m. Okay, and so you can see the next day price did actually come down a little bit and then closed right there. And then the final trading day of the week, on the Friday, price came from here and went all the way up. Missed our first take profit target by a bit, but did close right here. So I expect price to keep going higher, guys. I'm thinking it's going to get to at least our first take profit target. So I want you to keep your trade open, don't close it, and just exercise a lot of patience. Okay, so that is that trade. And now we're going to get on to the heart of this lesson, finding good pairs to trade, finding the strong versus the weak. Okay, so what pairs to trade? Well, in my system, the free Forex signals, I have a two-part process. You can see that right here. The very first part is we want to see a signal on the chart. Okay, now you guys don't have the same charts as I do. You will later on. When I reveal more information to you and give you more parts to the system. But in the meantime, you don't really have to worry about that because remember, you're just following my instructions and you're taking my trades, right? You're not trying to guess on your own. You're not trying to analyze on your own. I just want to take my trades, and it's as simple as that. So the first thing is we see the signal on chart, and just to let you know, what goes into these signals is that they are supported by the underlying energies of trend direction, momentum, market cycle phase, and the overall market sentiment. Okay, and then the second thing right here, guys, we want to see which individual currency is strong or weak. Okay, more on that in just a few moments. When we combine both these ideas, 1 and 2, this will give you better signals, okay, and a better chance for success. So let me take that off, and let's take a look at the very first part, seeing the signals, okay? So again, let's take a look here. Okay, so here we have a buy signal, okay? You can certainly see that here. Here's a buy signal. And it's indicated by these arrows, and you would get in, the buy entry candle is right here, so you would get in at the close of this candle or the open of that one, okay? And then you can see price did go up here, so this was a successful signal. Okay, let's take a look at the sell signal. Okay, so here's the sell signal, okay, right here with the arrow. Here's the entry candle right here, so we would get in at the close of this candle or the open of the next one. It's the same thing. It happens at 5 p.m. Eastern Standard Time. And you can see this one went all the way down for another big win. Okay, so now remember I said on the previous slide, we have underlying energies, and what makes these signals more powerful is that we follow this information, and one is the trend direction. Okay, so the trend direction is done in several ways. And you can see this DTL line right here. It's green right here. It's red right there. So when price is above the green line, we have an uptrend, and that is one way of seeing the trend direction. Momentum is seen by this indicator down below right here, and you can see when the histo bars are above the zero line here in the middle, and they're white, we have more momentum coming into the market. Okay, here the black means more momentum to the downside, white more momentum to the upside. Okay, so we use momentum as a filter to gauge the strength of the trend as well. Then we have a market cycle phase. Now that's done with this indicator right here. Okay, you can see the black, white line, black, white line. So these are market phases. So market phases means even in an uptrend, okay, and let me just draw it, even in an uptrend, price goes up. So there's a up market phase, down market phase, up market phase, down market phase, up market phase. That's what we mean by market phase, and they're cycling up and down, up and down. Okay, so that's what that means. And finally, we go to the overall market's sentiment, and that is with the background color here. So you can see this is all green, which means that the overall market sentiment is bullish. All red means overall market sentiment is bearish. Okay, so all four of these factors contribute to giving us better trade signals. Okay, and then now we want to combine that with the overall strong versus weak currencies. Okay, so let me just go on to the next one. And to do that, guys, I'm using a currency strength meter, okay, to help filter trade signals and identify the relative strength of an individual. Note, I said individual, one currency to another. We're not talking about pairs here. We're talking about an individual currency. So I'm always looking for strong versus a weak currency. Now, this provides me with a watch list of possible trade signal ideas. And you also get loads of other useful information when you use the currency strength meter. Okay, so let's take a look. Here is a currency strength meter. There are several out there, and you can get them online as well. And currently I'm using this one. I may switch to something else, but right now I'm using this one. And you can see that each line represents an individual currency. So this purple line kind of, hopefully you can see that while you're watching this video, is the Canadian dollar. Okay, and you can see Canadian dollar, and you can follow that right there. This yellow line is the Japanese yen. Okay, and then the other, all the other lines represent the major pairs. I'm sorry, the major currencies. Okay, so that really in a simple visual form, this is a currency strength meter, and it's more important what you see and what you can do with this. Okay, so let's continue. Now, remember, in last week, I sent out several emails saying that the markets were contracting and it was getting very difficult to trade, getting very difficult to give you proper signals. Now, you can see, look back here on March, right there, guys, on March the 15th, from here to here. Look at the currency strength meter, and you can see right here in this area, you see how wide the individual currencies are. Okay, so this is an expanded market. There's more volatility there. You can make better decisions, easier decisions in picking the right pairs to trade. But take a look over here as we get to the current time, guys. This is at the started at the beginning of April to right about now, and you can see how all these lines came together. Even right here, take a look right there. All the currencies came together, guys, and this was causing whipsaw in the markets, quick up and down movements, sideways markets, guys, and guess what? It was very hard. It's very hard to trade when you see this kind of pattern in the individual currencies. Okay, so so this is what I want you to understand, and the best way to show you is showing you this visually. Okay, so let's get on to the next really important. Here, expanding markets again. So here they're all coming together. You can see that, and now they're all starting to widen again. So this is an expanding market, guys, and this makes it easier to trade and pick the better pairs to trade. So when you see this happening, where you see some of these lines going up higher, down lower, and from here to here, it's expanded, then right in this area, that means then just makes it a lot easier to trade. Okay. We're gonna get into some really important stuff in just a moment here, guys. I want to remove that, and I want you to take a look at this, because what else can you learn when you look at the currency strength meter? Okay. Well, first of all, let's look at this. This is what you can learn. You can get the trend direction. Okay. So trend direction, take a look at this line right here, guys, and that's the Swiss franc. Okay, let me just, okay, see this gray line there, right there? That is the Swiss franc. So you can see from here, and if you follow it all the way back to this date, the strength, the Swiss francs have been getting stronger and stronger and stronger, and making it the strongest individual currency. Now, knowing that, take a look at this red line here, guys, coming from here all the way down to here, okay? And that is the British pound, guys. And you can see British pound became, the trend direction was coming down, down, down. So we had a bearish trend direction, a bullish trend direction. And that's one of the things you can gather when you know how to read the currency meter chart correctly. Momentum. The angle here, see the up angle right here, that's huge momentum for the British pound all the way to the top. And then finally, look at this acute angle all the way down, guys. So that's a big, huge correction and price direction coming down. Okay, so momentum is gauged by the angle of the line itself. You can see here in some cases, right here, the angle is very like horizontal, right, in some of these currencies. So that means it's neutral. It's not really gaining strength. It's not gaining weakness. It's just in the middle. Okay. Now, the next thing, and this is really important, you can understand by looking at this what's overbought and what's oversold. So clearly here, well, let's go back a bit. When the Canadian dollar was up here, right to the extreme top, right in this area, it is extremely overbought, and you know at some point soon, price will come down and the currency will come down, and there it did, right? And here, the extreme oversold, okay, and now it made a huge correction to the upside, and there you go, okay? So by just taking a look at this, overbought and oversold, you can also kind of put these currencies on your watch list, and then look at your charts to see when they start turning over, and then trading one against the others, or trading, in this case, the strong became weak and the weak became stronger, right? So you would buy this against this one here, okay? Or sell this against this currency. So this is a terrific, interesting idea. Taking a look even here we have overbought, here we have oversold. So as soon as they start reversing, and by the way, you can switch this currency meter to different time frames. So for some of you who are intraday trading or scalping, guys, this is really terrific. So you can actually change the chart from a daily. I've got it set to daily, but you can do it to hourly, 15 minutes, 5 minutes, and these lines and positions will change. So that can even help your intraday or scalping strategies. Okay. Now, next, let's take a look. Reversals right here. This is really important. You can, when you see price either coming down and going up, or here down and up, okay, that's a reversal. These are reversals here when they're oversold, overbought. So you can trade reversals if you wanted to, right? And reversals are terrific and in our free signal system, the reversals are a really good idea if they line up with the overall trend. And if not, then they in itself, you could create a new strategy, just a reversal trading strategy, which I may want to take advantage of in the near future as well. The next thing that's really interesting, crosses. I do this a lot. So I take a look here or here, which currency is crossing with another currency. So which one is going up, which one is going down. So here is an orange line. Orange is dictated, it represents the Australian dollar. The purple line here is the Canadian dollar. So you could, in fact, buy the CAD versus the Australian dollar and that. But you can look at reversals, major reversals here or here, intraday or on the daily chart. And again, you can trade that way. So that's really interesting and new interesting concept. Watch list. When you have your strategies or you know what you want to do and you know how to interpret this currency strength meter, you can create watch lists of 5 or 6, 7 pairs you're watching to see when this, for instance, this and this this. So this is the Canadian dollar and Japanese yen. So that could be on your watch list, and you're watching to see when when this comes down, when this goes up, and getting into a trade. Okay, so you can create watch lists based on your own personal criteria and what you want to do. But again, for the most part, guys, if you're following my program, all you have to do is follow what I'm doing and then taking the trades, and my trades are based on a lot of this information here as well as remember the signals I see on the chart. Okay, so guys, we're almost finished, and I just want to get on to the next slide. So kind of like just summarize everything, and this is really important. So the new concept here, guys, you've all heard of the expression trading with an edge, right? Okay, well, you can forget about most online educators who tell you that their system is the best, since most completely ignore this most fundamental idea, which is currency strength, to their trading system, right? So most online educators completely ignore this, or they won't talk about this, or perhaps they don't even know how important this could be to their own trading system. So that's why, you know, I don't listen to a lot of online gurus or educators. I come up with my own ideas and systems, which has worked very well for me in the past. Now, this idea, the idea of strong versus weak, has been proven to work throughout history and has caused the most important changes in this world as it evolves, even to these current times. Understanding strong versus weak currencies will help you make better decisions and give you the trading edge for better trading results, right? So the currency strength meter is a very powerful tool you should use. Okay, now, if you want my free trade signals, especially people watching for the very first time, okay, you've got to send me your email address with your name. Tell me where you're from, what part of the world, and right here, guys, you would send it to mskyj007@gmail.com. Again, send your email telling me you want to receive my free signals to mskyj007@gmail.com. Okay, so that wraps up this video, and cheers, guys. Cheers from Canada here. Don't forget to subscribe, okay, below this YouTube. Please hit the like button. Let me know that you're liking this video, and it's giving me encouragement to continue with future videos and information. Send me a comment. I'll get back to you as well. And there you go, guys. Cheers from Canada. Take care. We'll see you next week, next video, and next trading signals. Bye for now.